Curriculum Instruction 7 through 12 and the Director of High School Guidance. I'd like to welcome you all to our first financial aid presentation of the year. Those of you that are seniors and you go through this, we're going to do a FAFSA night in March, hopefully towards the end of March. If you need help filling out the FAFSA application as we go through this. Two important things to note. One, there's a gentleman in the back of the room recording this. He's live streaming it now on the social media page. So if there's anything here that you missed in the presentation, it is on the district's YouTube page, so you can go back and rewatch. If you enjoyed it so much, make some popcorn and watch it a second time. The second one is for seniors. I know that the senior counselors are going class to class to talk about scholarships for senior award night in June. Parents, you should be getting an email from me either probably Monday with the same information about scholarships and the same Google Classroom code to join to apply for scholarships. So make sure that you and your child look through all the scholarship opportunities that the town and the local community has to offer, and make sure that you fill out all the ones that you qualify for. It's free money, let's just be honest. Anything to help pay those bills for college or trade school will help, okay? So I'd like to introduce Mr. Jim Anderson. He is gonna do the financial aid presentation tonight and give you the information that you need. If after the presentation you have any questions, I'll be around in the back. Mr. Anderson will be in the front. And again, thank you guys for coming tonight.
Good evening, everyone. So you can see my day job is I'm the financial aid director at Montclair State University. I'm actually here on behalf of a state agency called the New Jersey Higher Education Student Assistance Authority. That is the state agency that manages all the financial aid programs for the citizens of New Jersey to help them go to college. And their mission is to help students. Our mission in financial aid offices is to help students to find money to go to college. There is a new law that was passed. You may already be aware of it, but if you're all here, I don't think it's going to be an issue, that students are now required to complete the federal aid application called the FAFSA as part of a graduation requirement. So if you're parents of seniors, then you have to file the FAFSA or get a waiver. They allow families to request a waiver. And again, the primary goal of the financial aid office is to help students maneuver through all these programs and get them every dollar that they're entitled to receive. So what are we going to discuss tonight? What is financial aid? By the way, I've been at Montclair for 15 years. I've been in the business for 45 years. The other 4 schools I worked at earlier in my career were all private schools. So I try to give you a flavor of how things are done at different types of institutions because there are some differences, but that's kind of my goal for the evening. But all right, so what is financial aid? How is eligibility determined? What is the Student Aid Index, or SAI? Types and sources of financial aid packaging, which refers to how colleges bundle together different sources of financial assistance into an offer to the student. And once you have all those offers, how to go about comparing them. Special circumstances. So you're going to find out when we get into the presentation that if you're parents of seniors and you're filing the FAFSA for the 25-26 academic year, it's going to be based on your income from calendar year 2023. It's a 2-year look back. So special circumstances refers to situations where there's been a change in the family's finances since they filed the FAFSA, or in this case, since 2023. The most common example would be if a parent becomes unemployed, for example. Keep that in the back of your mind. If something comes up that affects your family's ability to pay for college, it doesn't matter when it happens. It can be anytime during the student's freshman year, even in the spring semester of their freshman year. If something happens, they can go to the financial aid office at the college they're attending, and under the regulations, we're allowed to basically recalculate their eligibility, taking into account the new situation with the family. Consumer issues, you should see yourselves as consumers. You're purchasing a commodity. In most cases, the families are making their biggest investment after their mortgage, paying for college. And then an overview of the FAFSA, which is the federal aid application, which everybody files, and then the profile form, which I'll explain what that is a little bit later. So what is financial aid? Really, it's a generic term. It refers to any assistance a student gets from any source other than their parents. It comes in the form, the sources are the federal government, the state government, the colleges themselves, and then private sources. And it comes in the form of grants, scholarships, loans, and student employment. All right, so the free application for federal student aid, the FAFSA. This is a federal aid application. This is the student's application. The student it's their form. The parents participate in completing it, but it's the student's form. This form has to be filed each academic year. So if your parents are seniors, you're going to be doing it now for the 25-26 academic year, and then the following 3 years, you'll be doing it again. The FAFSA is used to determine eligibility for federal financial aid at every school in the country. It's used in the state of New Jersey to determine eligibility for state aid programs. If you're New Jersey residents and you file the FAFSA, it automatically goes to that state agency, HESA, that I mentioned at the beginning. And they will determine the student's eligibility for state aid. And it's used by most colleges as the sole document that they would use to award their own institutional money. So if the schools have need-based money from the college, they would use the FAFSA to award those funds to students. The college profile form is only used by a relatively small number of schools, maybe 200 or 300 schools in the country, but they're the most selective, mostly private colleges. Schools like Princeton University, they're right here in New Jersey. I always use them as an example. Highly selective colleges will require the profile form. So if you are looking at schools like that, you need to find out or figure out if that form is required. If you file the profile, you're filing it in addition to the FAFSA. You always file the FAFSA. Verification documents, I'll get into the verification a little bit later, but you may be asked to provide documents as part of the financial aid process, either to the school or to the state agency, HESA. The key thing is to know the school's requirements and to meet all deadlines. Deadlines in financial aid are really, really important, so you never want to miss a deadline in filing a form or submitting a document that's been requested. All right, so the Student Aid Index. I mentioned I've been in this business 45 years. The first 44 of those years, the index was called Expected Family Contribution. So if any of you applied for aid in the past, you might remember that term. Beginning in the current academic year, the federal government made huge changes to the financial aid process. In fact, the first year they did this, it was the current year, really, we're still in it, it was a disaster. They created a new form. It was 3 months late being introduced, and then when they introduced it, it didn't work. So they've made significant improvements. So those of you who are seniors, parents of seniors, and you're filing the form, it'll hopefully go very smoothly for you this year. But this year has been a mess. But one of the things they did was they changed the index. They're now calling it the Student Aid Index. The SAI is used to establish need, and I'll get into that a little bit later. But it also is used to determine eligibility in most cases for the federal Pell Grant, and I'll explain what that is as well. But it's an important number for you, and the lower the SAI, the better it is for you in terms of eligibility. The SAI is derived from a formula that looks at both the parents and the student. They're looking at their income, and they're looking at certain assets. I'll explain that as well a little bit later. But anyway, they come up with what is considered to be, the SAI is loosely intended to mean what the family should be able to contribute for college. And again, the SAI is used for federal eligibility. If you are looking at those selective schools, they have a totally different process. I'm not going to go into that in any depth here. The last bullet point, blue bullet point says EFC calculator. So the College Board has a very good website. I used it a lot when I was looking for schools for my own children. It has a lot of good information on it, but it also has this EFC calculator. This might be actually more useful for underclass parents here, like juniors, sophomores. Because basically what you can go in, the website, it's all free. The website is free. You can go in there and you can plug in your numbers and it will calculate an estimated student aid index. That'll be your first indication of how things might fare in the financial aid process for you. And again, the lower the number, the better. But that's the link to the calculator on their website. If they post the presentation to the high school website, you should be able to get it. Okay. All right, so how is aid eligibility determined? So at the beginning of every financial aid year, the college has to determine what the cost of attendance is going to be for the student. The cost of attendance is intended to be the total cost for a student to go to that college that year. So it includes direct costs, which are things you pay to the school, like tuition and fees, and if you live on campus, room and board. And it includes indirect costs, which are things you don't pay to the school, but they're real costs, like books and supplies, personal expenses, travel expenses. If your child goes away, my son went to school in Ohio years ago, every time he flew home was $500. That was an expense you had to plan for, even though you're not actually writing a check to the school for it. The cost of attendance is going to vary significantly from one school to the next, obviously. The private colleges are going to have much higher costs of attendance because they charge higher tuition. But anyway, they're still put together with the same components. Special circumstances, you can always go to the financial aid office at the college and ask for an adjustment to the cost of attendance if you think it's too low for some reason. And some of the things that you could use as a basis are in this slide here. The study abroad, if you study abroad, usually the school will calculate a different cost of attendance reflecting what the costs are for doing that for that semester or that year. If you have a disability situation in the home where someone's disabled and there's out-of-pocket expenses, you can ask for an adjustment there. Just because the school increases the cost of attendance doesn't mean you're going to get more financial aid to cover those costs. And the federal calculation of the SAI differs from, if you're applying to those elite schools that use the profile form, they calculate their own index. They're going to be very different numbers perhaps. But the key thing is, how do you define need? Is it lunchtime or something? I'm not sure. All right, so how do you calculate need? Need equals cost of attendance less the student aid index. So yeah, let's say your student aid index is $40,000. If you're at Montclair State University, you're not demonstrating need because that's a bigger number than our cost of attendance. But if you are applying to private colleges, the costs are going to be much higher and you will show need. So the calculation is the same, but the difference, there's a different outcome. A few more things that go into the cost of attendance, just a little more detail there. And again, the individual adjustments that could be made, study abroad, dependent care, expenses related to a disability, expenses for cooperative education. All right, sources and types of financial aid. So the sources, again, the colleges themselves, the federal government, the state of New Jersey, private scholarships. Types of financial aid, grants, scholarships, loans, and student employment. And the column over to the right are some of the things that a college may take into account in deciding how much of their own money they're going to offer to the student. It's more meaningful perhaps on the private college side, but public colleges too. So first of all, academics, of course. The student's academic record is going to make a big difference in terms of what the school offers. Athletic ability is up there, but you should know that the only time a student can get money for being an athlete is if they go to an NCAA Division II or Division I school. The one is the big time schools. Most colleges in the country are Division III, and there are no athletic scholarships, and the schools are prohibited from giving any preference to an athlete, meaning we can't give them more money because they're athletes, and the NCAA checks on that. SAT or ACT scores, they could be important depending on the school. A lot of schools now are test optional. They don't require you to submit test scores, but there are still quite a few that do require tests. And the schools that will offer, let's say, a merit scholarship based on SATs, there are many of them out there, and they do that because they want to, drive up their average SAT score because it helps them with the profile that they're trying to build for the school. Geographic diversity, I mentioned that my son went to school in Ohio years ago at a school that was fewer than 10% of the students were from out of state, and he ended up getting a scholarship that basically gave him a bridge between in-state and out-of-state tuition. So there are some benefits sometimes if you go to a school a distance away. The rigor of the academic program the student is involved with, so AP courses, honors courses, those make a big difference too. Legacy, that refers to a student who goes to a college that their parent attended. there may be some benefit to that at some schools. The students' activities, any extracurricular involvement, academic talents, all those things could be a factor. Gender and ethnicity. My daughter went to a college that was 2/3 male, and I think it helped her get a larger scholarship because most schools want to achieve gender equity, geographic diversity, the whole thing. So there could be advantages for a variety of reasons. The high school the student attended could make a difference. Class rank, not so much anymore because most high schools don't disclose class rank any longer. But certainly if you're the valedictorian or the salutatorian class, it'll make a difference. All right, so grants. Grants are a form of what we call gift aid. It's free money, does not have to be repaid. And usually if the word grant is associated with the fund, it's a need-based fund. The primary programs offered by the federal government and the state of New Jersey are called grant programs, and they're need-based. Scholarships are also a form of gift aid. It's free money that doesn't have to be repaid. And it's usually awarded on the basis of some kind of merit, academic merit, athletic, artistic, and so forth. Loans are loans. They must be repaid. There are federal loans, and within the federal loans, there's a loan program for students, which I'll go into, as well as one for parents. And then there are privately financed loans that are offered by like student loan companies or banks. Those companies tend to offer a wide range of terms because it's based on the credit worthiness of whoever's borrowing the money, so based on their credit score. So there could be a wide range of terms offered to people. Could also make a difference with the repayment option you select. If you may decide to defer payments altogether, or if you decide to pay interest only, and so forth. Whereas the private federal loans are fixed, as you'll find out. So you need to borrow wisely. Avoid borrowing if at all possible. I get asked sometimes if it's a good investment for a student to borrow towards their education. My answer to that is that statistically, a student or person who earns a bachelor's degree is going to earn about $1 million more on average than a person who doesn't achieve a bachelor's degree in their lifetime. So from that perspective, it's a pretty good investment. I don't think it's a terrible thing to have students take some student loans. And then student employment. This is working on campus, and it's like any other job. The student puts in a number of hours, they submit a timesheet, they get a paycheck. So if you get a financial aid offer from the school that may include all 4 of these categories of funds, the grants and the scholarships and the loans you can use to pay the bill. The offer of student employment, you cannot, because the student has to earn the money as they go. All right, this slide is about federal aid, federal programs. So the largest grant program in the country is the federal Pell Grant. The maximum award this year was $73.95. And that would be the amount, if you qualified for that amount, that would be the amount that you would get regardless of what college you attend in the country. It's all the same. There's also a supplemental educational opportunity grant program, SEOG. That's where the schools receive an allocation of funds from the federal government, and then the schools award it to the students, to the high-need students, the limited funding. And then the Teach Grant is a program for students who are planning to become teachers. But there's a catch with this one, in that if the student gets a Teach Grant and then they don't become a teacher, it becomes a Teach Loan. They convert it into a loan. So even though Montclair State educates a lot of future teachers, we're very stingy with the Teach money. The education school manages that, and they want to make absolutely certain the student's going to be a teacher before they give them the funds. And then finally, federal work-study, which is, again, funds from the federal government that goes to the colleges, and then we use the funds to employ students on campus. Okay, so if you file the FAFSA, at a minimum, the student is going to get offered a federal direct loan, or also known as Stafford loan. So the student will be offered that regardless of need. I don't know how well you can see the slide, but basically, if you look in the column in the middle, it says dependent undergraduate student. Those are the loan amounts that can be borrowed, and it's based on the student's academic level. So at the freshman level, they can borrow a total of $5,500. At the sophomore level, $6,500. At the junior and senior levels, $7,500 per academic year. And the aggregate limit is $31,000 for an undergraduate student. There's also a number in parentheses in the middle column there. So that number represents the amount of the loan that may be in the form of a subsidized loan. What does that mean? It means that the student demonstrates financial need, and then they're qualified for a portion of the loan to be subsidized, which basically means it's interest-free for the period of time that they're in school and for a grace period when they finish school. So the maximum subsidized loan for a freshman is $3,500. So if it's a needy student, they're going to get offered $5,500 total. $3,500 will be subsidized, $2,000 will be unsubsidized. And of course, the unsubsidized loan, the interest will accrue while the student is enrolled in school. But they're not required to make any payments. Students are not required to make any payments. Students don't have to, pass any credit tests or anything like that to get this loan. If they want the loan, all they have to do is complete entrance counseling, student loan entrance counseling, and a master promissory note. They do that online on the government website, and then they'll get the funds. The column over to the right is for independent undergraduate students, and they can borrow larger amounts. So what is an independent student? So the first part of the FAFSA is a part that the student completes, and they go in and they answer a whole bunch of questions which will define them as either being dependent, meaning dependent on their parents for financial aid purposes, or independent. So the most common reasons for a student to be independent would be if they're over the age of 23, if they're married, or if they have a dependent that they themselves are supporting, or if they're a veteran of the armed forces. Those are the circumstances where they're automatically independent. There are some cases where a student of a traditional college age, 18 to 21, may qualify as to be an independent student, such as if students in foster care and guardianship situations, no relationship with their parents, that kind of thing. So anyway, independent students can borrow larger amounts. The subsidized portion of the loan remains the same. And at the top, you see there the interest rate for the current academic year is 6.53%. It is fixed. And then they deduct an origination fee of a little over 1%. They take that from the proceeds. The interest rates on these loans are always fixed, and they're set each year. This is about as high as it's been in many, many years because the interest rates were going up and leading into last summer. The interest rates have come down since then, so we expect that the rates will be considerably lower this coming fall. They'll be announced by the federal government in July. This slide, and I know you can't read it, but there's an individual slide on each program. This lists all the New Jersey state programs. These are all the programs that that state agency, HESA, manages. So one thing that's really important to stay right up front is all of the grant programs offered by the state to students are only available to students who go to college in New Jersey. They cannot take the money out of state. So just keep that in the back of your mind. So the general requirements for state aid would be that the student files a FAFSA or an alternative application. So the alternative application is filed by New Jersey Dreamers. New Jersey Dreamers are undocumented students who attend in New Jersey, who live in New Jersey, their parents live in New Jersey. They attend a New Jersey high school for 3 years, and they graduate from the New Jersey high school. That qualifies them as a New Jersey Dreamer. They are permitted to receive state aid only. They cannot get federal aid, and they file a different form from the FAFSA. They file the form that the state puts out called the New Jersey Alternative Application. So, getting back to general eligibility, the student must be a U.S. citizen, an eligible non-citizen, or qualify as a dreamer. Eligible non-citizen usually is someone who has permanent residency in the United States, a so-called green card. But there are some other immigration statuses that qualify. The student has to be, again, a New Jersey resident, and the parent must be as well. And the student must attend a New Jersey institution to get all these funds. And they have to be, in almost every instance, they have to be full-time in a degree program. And it's need-based. So you file the FAFSA, you live in New Jersey, it goes to the state. The state's going to calculate their own index, which is called the New Jersey Eligibility Index, called NJEI. That's basically their version of the SAI. That number and the school the student decides to attend will determine the amount of the tuition aid grant, which is their primary program, the TAG grant. And the state has deadlines. I mentioned that earlier. I'm going to mention it again. If your kid goes to a New Jersey college next fall, 25-26 academic year, the deadline to file their FAFSA for their sophomore year is going to be April 15, 2026, during their spring semester. That's a hard deadline. If you don't meet that deadline, you don't get the tag award the following fall. So it's really important to remember to file the form. I would encourage you to think about marking your calendar around Christmas time when everybody's home. Let's file the FAFSA for next year. Make sure we don't forget to do it and miss the deadline. All right, tuition aid grant, TAG, which is the largest program offered by the state. The state of New Jersey is among the highest states in the country for total amount of support for higher education for students. And the TAG program is really incredibly generous. The maximum TAG award in the current academic year at a private college in New Jersey was $14,404. The maximum TAG award for someone attending a public university like Montclair State was $10,964. And at my institution, our tuition fees this year were a little under $16,000. So a student getting a maximum TAG award has most of their tuition covered just with that one program. Those are the maximums. And again, they're based on that student aid, the New Jersey Eligibility Index. The amounts go down depending on that index, all the way down to, you know, some students may get $1,000, but there's a scale, it's like a chart. But anyway, those are the maximum awards. And again, for the TAG program at the four-year schools, you must be full-time. Must be full-time registered in a degree program. There is a part-time TAG program, but it's only available at the county colleges. So part-time, you have to be at least half-time. So it'll be 6 credits, normally 2 courses, but less than 12 credits. So between 6 and 11, you can do part-time TAG. EOF, Educational Opportunity Fund. This is a program for disadvantaged students, economically, educationally disadvantaged students. If the student, there's additional grant money you get from the state in this program, as you can see in the slide. But really the primary benefit of this program is that every college in the state has a dedicated staff of EOF counselors who work just with the EOF students, and they do a wonderful job getting them through to their degree. So basically, if you're interested in this, if you think you might qualify, normally you would do it through the admissions process. So when you're applying for admission, you advise the admission office that you want to be considered for EOF, and then someone will determine if you're eligible. Governor's Urban Scholarship, let me see. I don't think, no, you're not, Belleville's not one of the towns. It's only these communities that qualify for this program. They're the lower income, larger cities, but I don't see Belleville. All right, NJ Stars. So this is the first of several programs where you can attend public colleges in New Jersey tuition free. So this is for community colleges. For tuition, so for NJ Stars, if the student is in the top 15% of their class at the end of either their junior year or their senior year, they're eligible for NJ Stars. This, as I mentioned earlier, high schools typically don't disclose class rank any longer, but the guidance department will inform the students if they're within that 15% that they are eligible. And if they are eligible, they can attend community college, county college, tuition free, and stay there for 2 years to get their associate's degree. And then they would transfer to any four-year public or private college in New Jersey for the second part of the program, which is called NJ Stars 2. And they would get a $2,500 scholarship in their junior and senior years at the four-year institution. Now, there are some academic requirements. There's no family income cutoff for Stars. There is for Stars 2. It's $250,000. Governor's Industry Vocation Scholarship for Women and Minorities. This is a program for people planning to study in construction-related fields. And it's based on the income of the family in terms of whether they qualify or not. It's a $2,000 grant. And then I Promise, which is kind of an umbrella term for the two programs that follow. These are programs that have been established in the last several years within the state, and there are additional ways to go to public colleges tuition free. So the first one is a community college opportunity grant. And if you can see the slide, there's 3 tiers. So they're looking at, for a dependent student, they're looking at their parents' income, the parents' income. And for those of you filing the 25-26 FAFSA, again, it's looking at 2023 income. So the parents' adjusted gross income, federal adjusted gross income in 2023 would drive eligibility in this program. So if the parents' income was between 0 and 65,000, students in tier 1, and they get 100% tuition and fees covered. And then there's 2 additional tiers, as you see, it goes all the way up to 100,000, where there's some discount afforded to the student, again, based on the family's income. Then there's the Garden State Guarantee, which is a more recently created program, which is available at the 4-year public institutions only. But it's based on the same breakdown of income as you can see there. So if the family's income is between 0 and 65,000, the student can attend the 4-year public institution tuition free. Now these programs, this slide and the one before, those 2 programs are called last dollar programs. What does that mean? It means the student doesn't get funding unless after all other grants they've received, they still have a gap. So if it's like, let's say you're in tier 1, they get 100%. They would only get funds if other resources they have, like the Pell Grant and the TAG and money from the school, after all that's been added up, if there's still something left to the tuition bill, that's when you get money from these programs. It's the last dollar program. 3+1 degree programs. So the traditional model would be a student goes to a community college for 2 years, they get the associate's degree, then they transfer to the 4-year institution and do two years there. There are some, not all, but some public colleges in the state, 4-year schools and 2-year schools, who participate in what's called 3+1. And what happens here is the student is allowed to go to the community college for 3 years instead of 2, and then they go to the 4-year institution for 1 year. And so the benefit to the student is they pay the lower community college tuition for that 3rd year. All right, loans. So this is about loans. Loans that probably involve the parents, all right? But before I get there, the top bullet refers to the monthly payment plan. Let me talk about that first. So most schools offer a monthly payment plan. What it does is it enables the family to stretch out whatever payments they're going to be making out of pocket. So like for the fall term, at most colleges, tuition is supposed to be paid in full in August before the semester begins. If the student signs up for the payment plan, they can stretch out their payments. Most schools use an outside company to manage this for them. It's not a loan program. You're not applying for a loan. There's a nominal fee to sign up for it, but at Montclair State, for example, we use an outside company. The payment plan is up to 5 payments per semester. So if the student signs up for the 5 payment plan for the fall semester, they'll be making their last payment in November, I believe. So basically, they're spreading out the payments to make it easier to come up with the money. All right, now on to the loans. So the Federal Direct Loan Program, the student loan that I referred to earlier, the Stafford loan, is included in that program. Also, there's a parent loan in that program called the Federal Direct Parent Loan for Undergraduate Students, PLUS. This is the loan where the parent is the borrower, not the student. And it does require a credit check. So this parent has to apply and be evaluated for the loan just like they would be if they were getting a car loan. If the parent is turned down for the loan, the schools are allowed to give the student additional unsubsidized Stafford loan funds. So if the parent's denied for the PLUS loan, the student can get an additional $4,000 as a freshman and sophomore per year, and $5,000 as a junior and senior. The interest rate on this program for the current year is 9.08% fixed, but there's a whopping 4.2% origination fee. The terms for this loan are not the best. So if you, as a parent, plan to do any borrowing at all, you're going to want to shop around, especially if you've got good credit. On the flip side of that, the PLUS loan program is the easiest loan program to qualify for from an underwriting standpoint. So you could get potentially turned down by a private lender and still get the PLUS loan. The last bullet there refers to alternative private loans. Those are loans I mentioned earlier. They're offered by student loan companies, financial institutions, banks. And Many schools, including mine, use a company called Elm Select. It's a not-for-profit company that works with the lenders and with the schools to help display information to the families. So if you wanted to get a feel for what's out there in terms of private lenders, you can go to Elm Select. You can just choose Montclair State. We're a large school. All the major players in this industry are going to be represented in our Elm Select page, so you can see what lenders are out there. But you can see what's there. You can shop around. You can do some compare and contrast. But again, if you've got good credit and you're going to be borrowing as a parent, you're going to want to shop around. This slide is a program, it's basically a private loan program, but it's offered by the state of New Jersey, HESA, the state agency. It's called NJ Class. Their terms are fixed, so whereas the other private lenders, the rates are going to be all over the map depending on what your credit score is and what repayment option you choose. In this program here, if you meet the credit qualifications, these are the rates you get. So it's the column in the middle there, you see those rates, those are fixed rates. And there's no origination fee. The Federal Plus loan I mentioned has a 4% origination fee. The private lenders and this loan program do not. None of them have origination fees any longer. They used to years ago. But of course, this is a slide put together by HESA, and it's their program. So they compare themselves to the Federal Plus loan program. And of course, they look a whole lot better than that. It is a good program. It is a good program. And the nice thing about it is that, again, if you meet the qualifications, these are the rates you get. There's not any variability in what you're going to be offered. The other thing that's important about this is that whereas all the state grant programs have a limitation that you have to go to college in New Jersey, for this loan program, that is not the case. So if the family lives in New Jersey and the student attends a college outside of New Jersey, they are permitted to borrow in the NJ Class loan program. All right, so these are the splash pages for the forms. The one at the top is the FAFSA, the one in green. The one in purple is the CSS profile. And again, that form is only used by a relatively small number of schools and only the highly selective colleges. So you know what they are. If you're applying to those types of schools, you may be filing that, but the vast majority of you will not. And then the one at the bottom is for the Dreamers. It's the New Jersey Alternative Application. All right, so financial aid packaging. This is how colleges put together financial aid into an offer to the student, all right? So first of all, the student has to be admitted to the school to get a financial aid offer from the school. And if you're filing the FAFSA, you should list all the schools the student's planning to apply to, regardless if they got in or not. You don't wait to be admitted to college to file the FAFSA and send the form to the school. You do that ahead of time when you're filing the form. So if the school has received the FAFSA and the student has been admitted, the school's going to put together a financial aid offer. For most of my career, it was called letter, financial aid letter. They don't want to use that term anymore, so we're going to call it offer. And so initially, it would include what I consider to be the entitlement programs, meaning programs where the student's eligibility has been established by, in the case of the Pell Grant, by the federal government, in the case of the tuition aid grant by the state of New Jersey. So if the student is eligible for those programs, those funds will be first and foremost in the aid offer. The federal Stafford loan, the student loan, almost always will be included. And then if it's a needy student, they might qualify for some funds from those other two federal programs I referenced earlier. And then finally, institutional aid, money from the college. And for a student getting a financial aid offer from a private college, in many cases, the institutional aid is going to be the most important component of their offer. So you receive all the financial aid offers and you are trying to compare them and understand what you're looking at. So if you've been offered money from the school itself, money from the college or the university, you need to understand why it's been offered, and more importantly, what you have to do to keep it. So it could be need-based, right? There might be a need-based grant, and if that's the case, you're going to want to know, well, what's going to happen in the future? What happens if my need increases? Will you consider increasing the need-based grant? On the flip side of that, what if my need decreases? Will you reduce it? I mean, what are your policies on renewability? For merit-based scholarships, generally there is an academic requirement to retain the scholarship. Usually it's a 3.0, B average. And that's important because schools will typically pull the scholarship if the student doesn't achieve the GPA requirement associated with that scholarship. And so for a family where, let's say the student's offered a sizable merit scholarship and you're making your decision to go to that college based on that, both the parent and the student should have some level of comfort that the student's going to be able to achieve the necessary grade point average. Because if they lose the scholarship, then you're faced with a tough decision about whether you decide to pull out of that school or whether the family finds some other money to make up for it. Differential preferential aid packaging. So this is, and a lot of what I'm talking about here is more for the private schools than the public schools, but schools admit a range of students, right? At one end of the spectrum are the students that they really, really want to come, and at the other end of the spectrum are the students who just barely got in, right? So you could have two students with identical financial circumstances who get two very different aid offers from the schools, same school. The high end, the one they really want, is going to get a whole lot more free money, gift aid, than the other student. So that happens all the time. Schools meeting full need, I'm going to jump down to there. The very few schools have the resources to meet full need for all the students that attend that school. It's primarily those schools that use the profile form, the Ivy League schools, the highly selected private colleges. They have endowments that enable them to do that. So they commit to meeting the full need of every student. That's the exception, not the rule. Most schools do not have anywhere near the resources to meet full need for all their students. And so oftentimes there's what we call a need gap. A need gap means that the cost of attending the school is here. You subtract the student aid index, you subtract the aid the student's been offered, and there's something left. That's the gap. And that's the gap that the parents would need to figure out how they're going to pay. So what is your bottom line? So what you have to do when you're comparing offers from multiple schools is do some simple math. What are the costs, direct costs? Tuition and fees, room and board if you're living on campus. You subtract the grants, you subtract the loans, you subtract that student loan if the student's going to take it. What's left is your out-of-pocket. You have to drill down to that number with each and every school. I work at a public institution. Many, many times I've had parents of prospective freshmen complain because they didn't get a lot of money from Montclair State. So, and then they say, well, they got all these great scholarships from these other schools. So I would ask them, okay, well, what did you get in scholarships from the other schools, and what schools were they? And invariably, you know, they were private institutions, right, that offered large scholarships. But I would do the simple math that I just explained to you and point out to them that, you know, you're going to be paying more at that school even with the big scholarship because the differential in tuition is that much different. So, and it may not be the case in every instance, but to be fair, comparing apples with apples, you have to do that simple math and come down to the bottom line. Difficult decisions. So you have students who, let's say a student applies to six schools. 2 schools are reach schools, 2 schools are kind of in their groove, and 2 schools are safety schools. They get into all 6. Where's the kid going to want to go? They're going to want to go to the reach school. But the parents may find out that that school is going to end up costing them the most. So to that point, I encourage parents to be really involved with the schools their kids are applying to. Parents should figure out ahead of time what they think they can afford to pay for college, what they're willing to pay for college, what they're willing to borrow if they're going to be borrowing. They should figure all that out before the student gets. I mean, over the many years I've been doing this, I've seen so many times where, especially the oldest child, the parents are not paying any attention to what that kid's doing, and they're applying to all these schools, and then they get into their dream school, and it's a very expensive private institution. And then only then do the parents find out what it's going to cost them to send them there. And then they're really faced with a dilemma, because do we spring for the money or do we ask for them to pick a different school that's more affordable? You know, tough decisions and things you don't want to get involved with. So I encourage you to be involved with what your kids are doing, and again, try to figure out your finances as best you can before you get into it. The other thing I would mention is that over the years, I've seen that the oldest child goes to that dream school, but then the parents figure out, well, we can't afford to do this again, so when the younger kids come up a little bit later, their options are not the same. So I encourage you to think of college financing as a family thing. If you've got multiple children, you want to be fair to all the kids, so think about it from that perspective. I'll tell you a couple of stories about my own kids. My oldest, my daughter, was a great student, high SAT scores, took all honors classes, GPA was above a 4.0, all that stuff. She wanted to study art, but she had her own requirements originally. She didn't want to go more than 2 hours away from home. She didn't want to go to school in a big city. And so I went looking for schools that would work for her and work for me. I had done the math. I knew we were not going to demonstrate need. So I went looking for schools that would offer a good art program for her, because she wanted to study art professionally, and would give us a good price. So there were schools out there that were willing to give merit scholarships based on her academic credentials. And so she ended up going to a school called Rochester Institute of Technology, which is known as an engineering school in Western New York, but they have an excellent art program. And that's the school that's 2/3 male. I mentioned that earlier. So the fact that she was a female and also a really good student got her the largest scholarship that they offered, and it brought our costs down, the parents' costs down, to what it would have been had she gone to Rutgers. My son came along 3 years later, just as smart as his sister, but he didn't do any work in high school. He frustrated the hell out of me. I kept checking, and he was not doing his homework and all that stuff. His idea was that with homework was that it was optional. So his GPA was closer to a 3.0 than a 4.0. And so he wanted to go to a large school, Division I school, for the atmosphere, the sports and all that. One of his best friends had gotten into University of Michigan early decision. He goes, maybe I'll go to Michigan. I said, maybe you won't go to Michigan because you're not going to get into Michigan. So anyway, I went looking for schools that he did. One thing he did really well on his SATs. So I went looking for schools that would give him a scholarship based on the SAT scores and having that minimal 3.0 GPA. And so we took a little field trip. We went to West Virginia University, we went to the University of Louisville, and then we went to Ohio University. And he ended up going to Ohio. As I expected, he was admitted to all 3 schools. He did get scholarships because they said right on their website they were going to give a scholarship based on this SAT or ACT score and this GPA. So he ended up getting a scholarship that bridged the gap between in-state and out-of-state tuition. So it ended up costing us less than to send him to school in New Jersey, aside from flying home for $500 every time. But the best part of the story is he did become a student, and he graduated magna cum laude with a degree in finance, and he's doing very well. So the good news is that if your kids are goofing off in high school, there's still hope. But anyway, I tell you these stories because you can do exactly what we did. You can research the schools out there that are a good fit academically and a good fit financially for the families. You can do the same thing we did. All right, so you get all the financial aid offers, and you want more money. Can you ask for more money, make an appeal? Yes, absolutely you can. But if you do, you have to have a reason for asking for the money. Is it need-based? You want them to give you more money because you need it? So think about what they think of your need, right? So they know what the cost of attendance is, that student aid index, the aid they've offered, how much of a gap is there? Is it a small gap or a large gap? If it's a large gap, maybe you'll have a better case to make. And on the merit side, you want more merit scholarship money, you really have to have a feeling for where your kid fits in at that school. Are they going to be a star academically, or are they going to be an average student? Colleges, especially most private colleges, are tuition dependent, meaning that they have to get a certain freshman class in order to pay the bills. So they get very anxious about the deposits as they come in, right? So I'll tell you a story. Years ago, I worked at a private college for a couple of years. They notified all their students about that they were admitted on April 1st, and they got financial aid offers the same day. And then you have a month, right? You have to decide by May 1st where you're going to go to school. So they had like an admitted student day in early April, and people showed up at the school, and my boss was the dean of admissions, and he made all the decisions on the appeals. So they would come into our office, they asked for more money. So the first year, the deposits were coming in pretty well. He was pretty confident based on how many deposits had been received, that because they have a lot of early decision students and that kind of thing. So how many students do we have deposits from? And because he was fairly comfortable with where they were, the appeals, we were pretty stingy with the appeals. The very next year, same school, different situation. The deposits were not coming in the way that he had hoped. And so the appeals were pretty generous. So same school, 2 different years, 2 different outcomes. You're not going to know going in whether the school is worried about getting a class, of course. So there's 2 strategies. One is that in the event that is the case, if you submit an appeal late in the cycle, you might do better. But there are some schools that have appeal money set aside, and it's first come, first served. So it really depends on the school. But that's kind of how the appeal process works. There are some schools that won't entertain appeals at all. All right, some other things to think about. Treatment of outside scholarships. So let's say your kid gets a sizable local scholarship, like $5,000 from the Elks Club. So you get the financial aid offer from the school. You make the decision on May 1st that they're going to go to that school. The bill comes in July, and you say, okay, this is great. I'm going to apply all the financial aid they got, and then I'm going to add on that $5,000 scholarship. Well, it may not turn out that way. And this is, again, mostly a private school thing, but there are some schools that will make adjustments to the offer that they've made to the student if they become aware of the student receiving outside funds like that. So, again, I'm only talking about sizable amounts. If you have $1,000, I don't think it's going to make a difference. But if you have a sizable scholarship, you might want to ask the school before you deposit, what is their policy? Do they make adjustments to their aid packages based on you bringing in that scholarship? Scholarship scams, if you have, if someone wants to charge you a fee to apply for a scholarship, I would just stay clear of it. Consultants, this is where families hire a so-called it sounds like the Gong Show. They don't like my presentation. I say Gong Show, and probably not too many people in the room knows what that show was because you're too young. But anyway, the consultants. So these are people that offer for a fee to help families with the financial aid process. I don't personally think you need to hire somebody to help you complete the forms. I think you can do it. The angle that they take, and they're probably targeting higher income families, honestly, because they're the ones that are looking for the biggest break. But they'll basically sell themselves by saying that we can make you look poorer than you otherwise would look. So what is the primary way that they do that? They tell you to move your assets around. So let me explain the asset situation. So in the formulas for the index, or the student aid index, or the index used by those elite schools as well, there is a greater expectation of a contribution from money that's in the student's name than in the parent's name. So in the federal methodology, if a student reports that they have assets, 20% of whatever they report, it gets added to that student aid index. If that same amount of money was instead in the parent's name, the contribution is more like 5 or 6%. So the moral of the story is you're better off not having money in the kid's name, and that's what the consultants kind of try to sell. Now, before you all run home and move money around, remember that that's just one aspect of this, right? The index looks at income as well. So I'm not encouraging you to do all that. I'm just telling you how the system works. All right. Net price calculator. The regulations require every school to have a net price calculator somewhere on their website. This is a tool that prospective students can use. They can the student can plug in some numbers, and it will give them an estimated financial aid offer from that school. Whether that's useful to you or not really depends on the school and which tool they've decided to use. Many schools, including mine, actually pay someone to do this for us because we want to present as clear a picture as we can. But there are some free tools out there. The federal government provides one. The schools that use those are not as robust. And so you could get good information or maybe not so good information. Just remember that when you're looking around. Back to the profile very briefly. There's 2 slides. Again, this form is only required by certain schools, and it's mostly highly selected private schools. They the form has become, that form has been traditionally always available October 1st. And it, like the FAFSA, looks back 2 years for at income. And it's a fee-based form. The families with incomes below $100,000 are not required to pay a fee. And they have their own customer service. All right, back to the FAFSA. So the FAFSA will be available next year on October 1st because Congress passed a law mandating it. But the U.S. Department of Education, for the current academic year, didn't make the form available till the end of December. And for the form for 25-26, it became available on December 1st. Actually, they beat that deadline, so it became available in November. But next year, it's supposed to be back to normal, October 1st, and the form will be available. You file the form electronically on this website. And they've used a new terminology now called contributors. So anybody that puts anything on the form is a contributor. The student's a contributor, and one or both parents are contributors to the form. And both the student and the parents will be asked to give consent when they're filling out the form. Consent meaning permission to have the tax information from the Internal Revenue Service brought into the FAFSA electronically. So you're going to want to do that, because if you're successful in doing that, then the form is considered to be correct and accurate, and you don't have to worry about making corrections, certainly not financial ones. If you cannot, if the link doesn't work, then you will have to enter the information in manually. Now, if the parents are a married couple and they filed their federal tax return jointly, then only one parent will need to be a contributor. If the parents are married and they filed married filings separately, then both parents will have to be a contributor on the form. So let's talk about who is a parent. So the students, parents that are married, they live together, the student lives with the parents, both parents contribute information on the form. If the parents are the biological parents, never married, and they're living in the same home with the student, both parents provide information on the form. If the parents are separated or divorced, this is a big change that took place this year. So traditionally, the parent that would complete the form would be the one with whom the child resides, the custodial parent. For this current academic year and going forward, the instructions for the student, when they complete the student section, are that if the parents are separated or divorced, they are supposed to determine which of the two parents provides primary support, and that parent would be asked to complete the form with the student, whether the student lives with them or not. That's the way that works. If the parents are divorced, and the student, let's say the student's living with the mother, and they've decided the mother is the primary, caregiver, mother's going to be the one reporting information on the form. If the mother has remarried, the stepfather's information has to go on the form. So that covers most of the scenarios. I think that, yeah, okay, we'll leave it there. Family size. So this is important. Family size represents your family size. So it includes the student, it includes the parents, it includes other dependent children, and it can include anyone else who's living in the home that the parents are providing more than half support for. So like a grandparent, you can count the grandparent. There's an optional question on the FAFSA. You don't have to answer it. But if you don't answer that question, they're going to assume that whatever the number of exemptions are on the federal tax return that was brought in from the IRS, that is your family size. So it's especially important if the number of people in your household, in your family size, differs from the number of exemptions taken. It's important that you answer that question on the form and put in the correct number. The second thing that's important is the number of children that are enrolled in college. So traditionally, the federal system, when there were more than one in college, they gave the families a break. They basically calculated the parental contribution and they divided it by the number of students in college. They did away with that with this year and going forward. So on the federal side, there's no benefit to having multiple children in college. But for the state of New Jersey, it still matters. So if you've got more than one in college, you're going to want to make sure you answer that question on the form and put in that number. The family size is a projection of who will be living in the family during the academic year. So it's for people who will be freshmen in 25, 26. It's for family size is going to be July 1st of 25 to June 30th of 26. Assets. So there are some notable assets that are not reported on the FAFSA. And by the way, you report assets as of the day you file the form. All right, the day you file the form. But the notable assets that are not included on the FAFSA would be any retirement savings that the parents may, or the student may have, 401k, IRA, that sort of thing. And also if the parents own a home and they live in that home and there's equity in the property, they do not report that equity on the FAFSA. Everything else counts. So if you've got any savings or stocks and bonds that are not part of retirements, or if you have a property other than your principal resident, like a rental property or a vacation home, or if you own a business, if you have a small business, you have to report the assets of the business on the FAFSA. And this applies to the student and the parent. And again, it's as of the day you file the form. So if you have cash in the bank, $10,000 in the bank the day you file the form, and the next day you go out and buy a car for $10,000, you can't go back in and change it. You're locked into what you report on that day. But that's the way that works. So just to recap, to make things real simple, income, they're looking back 2 years. Assets, they're asking you the day you file the form. Family size, they're asking you to project what will be during the academic year that is coming. Let's see. All right, FSA ID, this is important. So before you file the FAFSA, the student and at least one parent have to obtain what's called, well, I think they changed the name of it now to Student Aid account. Yeah, studentaid.gov account. But anyway, we're still calling it FSA ID, Federal Student Aid ID. So you go to this website and you apply for it. You're basically creating a username and a password, and you're submitting information about yourself, and you submit that to them. They run it through the Social Security Administration, Homeland Security, because they're basically going to confirm that you are who you say you are. They're going to check to see if the username that you want to use see if anyone else is using it. But they'll get back to you and confirm that you're good to go with that ID. That's your ID for life. So the student will always use that in completing that FAFSA and FAFSAs in the future. The student will use the FSA ID to, if they take that student loan I mentioned, to sign the promissory note. But you don't get a second one. It's only one. Same thing with the parents. You have it for life. If you have multiple children, you're going to use the same ID when you go in to file the FAFSA for different children, and so forth. So you have to do this in advance of when you fill out the FAFSA. You should allow probably a week to do it, because it might take them a while to get back to you. All right. Again, if I mentioned before, if the parents are married and filed separately, then both parents would need to get the FSA ID and be contributors on the form. This year was a disaster for undocumented students or students who have undocumented parents. They have cleaned it up considerably, so it should be possible for people to complete the form this year. But for the year that we're in right now, when people started doing this in January, it was a real disaster. All right, I just talked about the link to the Internal Revenue Service. What I forgot to mention is that when you're transferring information from the IRS into the FAFSA, you can't see that information. You can't see it as it's moving, and you can't see it once it gets into the FAFSA. They do that for security reasons. So the financial aid offices can see all the information, but you will not be able to. And I had mentioned you'll be asked to provide consent. Remember that word. So key requirements for the FAFSA: the student has to have a Social Security number. The student must be planning to be enrolled in an eligible program at an eligible school. For federal aid purposes, the student must be a U.S. citizen or an eligible non-citizen that I mentioned earlier. And again, New Jersey Dreamers do not file the FAFSA. They file the state's form instead. And these are some of the things that go into the form. I'm not going to go through them, but I would just encourage you to take your time when you're completing the form. Take your time. Make sure you remember whether you're in the student section or the parent section. Make sure you get the right Social Security number, right date of birth. The name that you put on the form needs to match exactly what's on file with the Social Security Administration. So if you're not sure, pull out that old Social Security card and look at it. You know, you don't put in a nickname, or if you have a hyphenated name and it's not hyphenated on your Social Security card, leave the hyphen out. Because it has to match. If it doesn't match, it creates a lot of problems. Let me see what else is on here. Okay. All right, after you complete the form, you're going to get this document electronically. It's called the FAFSA Submission Summary. So it'll basically confirm that the FAFSA has been completed. It will give you some basic information, including that student aid index. After the form is filed, you can go back in and make corrections to not to the income, because you won't be able to see that, but you can make corrections throughout the form if you need to do so. The student can. Verification. So traditionally, about 30% of students were selected for federal verification. What does that mean? It means that the federal government selects a student, and then they require the colleges to collect documents from the student to verify that the information that they put on the form was correct. Because of all the problems with the FAFSA last year and this year, the numbers are very, very low for verification. But for those of you who are parents of seniors and you're going to be doing this for the coming academic year, we're probably going to go back to normal. I think we might. So what happens when the student's selected for federal verification is that they get a communication from the school, the financial aid office at the school that they're attending, saying you've been selected for verification, we need documents from you. If you've done the link to the Internal Revenue Service, you will not have to provide tax returns. So that's one of the reasons why that's beneficial. But you'll be at a minimum required to submit a form, a verification worksheet. That's federal. The state also has state verification, HESA. So if the student's selected for state verification, they're going to get an email from the state. They're going to be told that they need to submit documents to the state, and it will be through the student portal with HESA, which is called NJ-FAMS. The one thing I want to mention is really important, is that the communication is going to be to the student, not to the parents. And it's going to be via email. So the students have to read their emails. And they have to read them year-round, summertime, anytime, because they don't know when something's going to be coming to them that's important. But they have to read them, and they have to respond to them. But the parents are left not knowing what's going on. And you know, every year we have a certain number of freshmen who are selected for state verification. They start getting emails from the state in February or March, and they get them every 2 or 3 weeks, all summer long. They don't respond to any of them. So the state has initially put together an estimated tuition aid grant. If the state hasn't heard from that student come September, let's say, they cancel it. It's gone. So the students, you know, they have this nice financial aid offer from the school, and all of a sudden a large chunk of their money disappears because they didn't pay attention. So make sure your kids read their emails. I already talked about the Dreamers. So this is NJ-FAMS. Again, after you file the FAFSA, the student can go in and create a login to the state portal, NJ-FAMS, and they should do that if you're applying to New Jersey schools. And it'll enable the student to upload documents if they're being asked to do that, but they'll be able to go, if they missed those emails, they're all there. They can go in and read the old emails that they missed. They can also, if they're applying to multiple New Jersey schools, at one point early on in the process, find out what their tuition aid grant amount will be at the different schools, because the amounts will vary. So there's a lot of good reasons for the student to do this. So the cycle for financial aid, again, I mentioned earlier, you don't wait to be admitted to file the FAFSA, and you put all the schools on the FAFSA. If you don't get into that school, no harm, no foul. The time frame, so next year, if you're parents of juniors, it'll be October 1st of this year. You can file the FAFSA for their freshman year in college. For the parents of seniors, you can do it right now. So we're going to go back to normal. So it's going to be October 1st starting next year. So the student submits the form. They start getting admission letters from the schools, depending on the school. A lot of schools have rolling admissions. They might start getting admitted to schools in November. And they might start getting financial aid offers next year on a normal time frame, maybe as early as December. This year, it's probably going to be starting this month for most schools. The financial aid offers are going to go out the door. But the ideal situation is that you get all your admission, you get all the aid offer letters in front of you, and you do your comparisons and make your decision. And then on May 1st, you have to make a deposit to determine which college you're going to be attending. And then during the summer, you do orientation, you register for classes and all that, and then come July, the family gets the bill and it becomes very real. Now, you should know that if students been offered financial aid, when the bill comes, it's going to reflect the aid as a tentative credit. So the money is not actually paid to the student's account until, typically, bless you, until after the semester starts. But it'll be reflected in the bill, so you'll basically be billed for the difference. So what should you be doing now? Looking at the schools. I mean, you're deciding what schools you're interested in, and spend a lot of time looking at their websites, the financial aid pages as well as the admission pages. Make sure you don't miss any deadlines. Some schools have deadlines to file the FAFSA. You don't want to miss that deadline. And this form here, which I know will be hard to read, is called the College Financing Plan or the New Jersey Shopping Sheet. So the state of New Jersey passed a law a couple of years back that mandates that all schools in New Jersey use this form to communicate financial aid offers to the schools, to the students. So the offers you get from New Jersey schools should all look exactly like this. And what it does is it breaks down the costs for you. It tells you what those direct costs are, what the free money you're getting, and then it does the math for you. It doesn't subtract loans. They let you do that. It also provides information in the green box there about things like graduation rates and student loan default rates and things like that, which will may be useful information for you. Now, if you're applying to out-of-state schools, they're not going to be using this form. They're going to use their traditional form, which they created themselves. So it's really important that you scrutinize those offers from out of state and make sure that you're doing the math, as I said earlier, to do a fair comparison. A few other things outside scholarships, you should be pursuing those. Payment plans I already mentioned. There are some specialized campus employment opportunities that I'll mention. One really good one is resident advisors. This wouldn't be for freshmen so much, but for upperclassmen who are selected to be resident advisors. What that means is they're basically hired by the school to look after a floor in one of the residence halls. They usually get a free room and a stipend. So it's a good deal. It's a good way to save money. Student ambassadors, student tour guides. If you're visiting campuses and taking tours, it's probably a student taking you around. They get paid to do that. And then internships. If your kids have to do an internship, hopefully it's a paid one. And then co-op is cooperative education. This is offered by some schools where a student will alternate periods of relevant employment and going to school. So let's say it's an engineering school student. They go to school in the fall, they go to work for an engineering school in the spring, and they keep rotating back and forth. So the benefits there are the student makes money while they're in school, but they also get really good experience. So there are some schools out there that offer very robust co-op programs, and you can certainly look for that. Other resources, the schools, the high schools, of course, the colleges' websites, the local libraries. You'll see some websites at the bottom here. The one I'll focus on is the third one from the bottom, called FastWeb. That's one of many free is the operative word here, free to use websites where a student can go in and enter information in about themselves, their intended major, their religion, their ethnicity, whatever. And the website will look for scholarships that match up well with that student. So I would encourage you, never too early to start looking at this. So if your kids want to spend some time on that, they should. But now's the time, because the deadline for applying for a lot of scholarships, private scholarships, will be coming up fairly soon. In my career, I've seen some students be tremendously successful doing this, but it takes a lot of time and effort. They may have to write essays, they may have to get letters of recommendation. It could be a lot of things. NJ Best is a 529 plan. It's a college savings plan. This is New Jersey's version. Every state in the country has one of these. And it's New Jersey's version is sponsored by HESA. And it's a good program. They've enhanced it a lot in recent years. So if you're still in the savings mode, it's something to check out. They now offer scholarships and tax deductions. While I'm talking about 529 plans, let me explain how they factor into the FAFSA, right? So a 529 plan is considered to be a parental asset, not the student asset. And they made a very positive change for this year, which was that the only 529 plan money that you would be required to report on the FAFSA would be money in the name of the student whose FAFSA you're filing. Excuse me. And traditionally, they required the parent to add up all the 529 plans they had and report them all. So it's only the one for the student filing the form. If someone other than a parent establishes the 529 plan, like a grandparent, it does not get reported on the FAFSA at all. So that's the good news. Technically, what happens, though, is when the grandparent makes the money available to the student, in whatever calendar year that occurs, that's considered to be untaxed income for the student. They're supposed to report it on the FAFSA. So if they do, then it could impact their eligibility for aid in a future year. So just remember that. HESA, the state agency, they have a lot of stuff on their website. I encourage you to check it out. They have pre-recorded webinars. They also have all these flyers that you can print out on various topics. They're very useful information. Just go in there and print it out. And they have a customer care, several websites that you could, depending on the issue and the phone number, that you can call them and get help. And that's it. I put my email address here, and when I do these programs, I offer to parents, if you have a question about financial aid at a later date, feel free to email me. You don't have to be applying to Montclair, and I'll try to answer the question and get back to you. But that concludes the program. So you want to come down? I will stick around, by the way, if any of you have one-on-one questions you want to ask.
Thank you, Jim. Thank you all for coming. I wanted to say this now at the end of the presentation. The state of New Jersey has a graduation requirement for seniors and then for juniors next year that you are required to fill out the FAFSA application to graduate high school. Okay, if you didn't know that that was a thing, it's a thing. So if you fill out the FAFSA, we're going to ask for proof that you filled it out. I'm not going to ask for your FAFSA. I'm not going to ask for the numbers. If you're not filling out the FAFSA, we have a waiver form that you can fill out and sign and send back, and that will count as the FAFSA application itself. Just so that you all know that is one of the new graduation requirements from the state of New Jersey, okay? In the back is Ms. Mendola, one of the senior counselors, Mr. Flynn, Ms. Murata, and right next to the three senior counselors is, I'm going to say it wrong because I still can't remember you're married, Ms. Fasolo, not Ms. Capitelli. We're all going to hang around after this, so if you have any questions for any of us about financial aid and FAFSA, come and see any of us while we're here. Thank you for coming. If you missed any of this, it will be on the YouTube channel, and I will email it out to you tomorrow. Thank you.